You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries. As we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media, this is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender.
Yeah, baby.
Welcome back.
I don't know. Do we go with Vinny or do we go with Arnold today, Josh? What do you think? Todd Halterman is with us. Welcome.
Ooh.
Mr. Horshack. There we go. Okay, for those of you that remember the show as well as I do, there's some people that are listening, I'm sure, that do not remember the broadcast. Got to get them to go back and take a look at when comedy could still be funny. Didn't have to be politically correct. But hey, let me remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. Of course, we are celebrating today. Although I look at our celebrations today, and the only thing that comes to mind is tomorrow. Tomorrow's Bagel and Lox Day, because you can't go wrong on Bagel and Lox Day. Today is, and well, Todd, you have that. You know, you're up there in the fishing country, so you've probably got some fairly decent salmon up that way, don't you?
Oh, we get some beautiful salmon in the Columbia River.
Oh, what is that? Oh, Columbia. How far is the Columbia River from the Copper River?
Quite a ways.
Shows what I know. I'm from California, man.
Yeah.
Todd's up there. Are you in Washington today or Idaho today?
Today I'm in Washington.
Yeah, he has to look at the calendar. Where am I at today? Washington.
I go to Idaho to have some normalcy, and I come back to Washington to see my kids.
I don't know if we want to.
I got a bad feeling about this.
Yeah, but you get to go see your grandson too, so that's got to be fun.
Oh boy,
let's moving right. Well, today's National Boy Scouts Day. Kite flying day here in Southern California. Kite flying might be pretty good. It's supposed to be windy again. National Iowa Day. Let's just tomorrow we can eat all day. We've got bagel and lox and pizza both. So I don't know. We'll see what the team puts together, and we're gonna follow that with cream cheese brownie day. Now I could sit here and study all these food groups. I do have a balanced diet, so we have to talk about bagel and lox and pizza, followed by a cream cheese brownie. That does not have. I think we got eggs in there, and we've got fish in there. We've got cream cheese. Got to be dairy. So we got all the food groups covered. Let's take a look at the markets. Dow Jones now up 300. Dow is up 309 points today. Wow. S&P 500 up 29. NASDAQ is up 129. That's good news. Oil. Wow, down $2.29 a barrel of oil. Being that we've got Todd on the program with us, should we look and see what's going on right now? I don't know. Todd's got to be better than we are here in the formerly Golden State. But, hey, let's take a look. So we've got Lori, our tremendous underwriter, $3.21 a gallon for gasoline. Jody, what's that?
That's low.
320. Yeah, well, she's in America. Jody, she's at 365. Josh, you're trying to catch us in California. You're at 387 now. Todd's up there, 395. You're not, we're still winning. We're winning. 468 right here in the formerly Golden State. 468. I paid $4.75 yesterday at Costco. $4.75. 345 is the national average for a gallon of gasoline. And as I share all the time, in the oil producing state of Hawaii, they're paying $4.41 a gallon. Now, 441. Wouldn't it be nice, though? I mean, I'm looking at the news. I watch all kinds of news programs. I share that all the time. So checking this out, I know we've got cancel culture is still in the news. So they're trying to see if they can push Joe Rogan out. This is a fascinating story. How'd you like to be pushed out of your job, or they're attempting to, and have somebody sitting in the background saying, I'll give you $100 million to come over here. $100 million. I know a financial advisor that might help on that one, but $100 million is what Rumble is saying to Joe Rogan. If Spotify wants to cancel you, if Spotify wants to turn you off, Rumble, $100 million contract is the offer right there. All because he wants to tell people what's really going on in the world. Fascinates me. I mean, think about some of these things. And I had an opportunity, I think it was a week or two ago, to have a chat with one of the county supervisors here in Orange County, California. Fascinates me because I do have family in Orange County, California. I do have family in Los Angeles County here in California. And they're all of the belief that you have to hibernate, wear masks, get vaccinated, be secluded. But wait a second. California, Orange County comes out. They've got the best numbers under every single statistical category.
Really?
So hospitalizations, deaths, contracting COVID, recovery, everything you want to know about COVID. Orange County has the best numbers, yet we don't have to seclude. We don't have mask mandate. Well, some of it, like UCI, they do, but do we have to call them part of California? I'm part of Orange County. It's a school, but restaurants, the state says you have to wear a mask, but they don't mandate it. There's enough restaurants to go to without it. When the restaurants were supposed to be closed, Orange County stayed opened. The county supervisors basically said, you know something? You're Americans. You can take responsibility. This country was built on taking risk. Think about that. I mean, Todd, you're a military guy. Obviously, you took a lot of risk to protect our country, right? You got a lot of friends that took a lot of risk to protect our country. So, what would it be if the brave men and women of our military, our police, our fire, all said, you know something, that's a little risky. I'm going to stay home today, right? That's not the way our country was built.
No.
But then you get some of these politicians that say, you got to wear a mask. Well, you have to wear a mask. They don't have to wear a mask, right? Did you watch the football game? I know. We've got Bill Clinton was at the game. Oh, no, I'm sorry. Eric Garcetti was at the game. He was just acting like Bill Clinton. So they take pictures of him without his mask, and he said, well, I held my breath. I think he might have heard that from Bill Clinton somewhere, but that was what his line was. He took pictures holding his breath. I don't get it. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, don't let student loans delay your homeownership dreams. How to talk to your partner about money and credit. Getting out of debt. We like that one, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990. Or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Dow Jones now up 290 points. NASDAQ is up 116 points. The S&P 500 up 29. 10-year Treasury is up 4 basis points at 1.96 is the yield on that 10-year Treasury. Mortgage-backed securities, they're down 20 basis points. That is painful when you're thinking about that next home loan. That means interest rates are up. Why would that be the case? Well, got a couple of things going on right now. So here's the issue. We got this jobs report last week, and you know, you look at jobs reports, and they come out with these numbers, and the headlines say one thing, and it takes a little bit of time sometimes to digest what's going on. Why does it not feel like we've got a great economy going? Why does it not feel like the jobs numbers are as good as they came out with? Well, maybe that's the case. Key headline that investors and analysts celebrated was the 467,000 increase in January, well above estimates of 150,000. But the report also showed that hours worked dropped from 34.7 to 34.5. As a result, the total number of hours worked fell 0.3%, the largest decline in almost a year. If that 0.3% drop had come in the form of fewer jobs, while the number of hours per worker didn't change at all, jobs would have declined by 350,000 jobs in January. But what about the huge 709,000 upward revisions in payroll in November and December? Usually this can add to the strength of the report, but the January report every year is different. In January, the Labor Department goes back and revises monthly seasonal adjusted factors for the whole calendar year. This year, November, December figures were revised up substantially, but all those gains came out of June and July, which were revised downward. What about the household survey, which showed 1.2 million jobs gained and a 1.4 million increase in the labor force? Every January, the Labor Department inserts into the jobs report new Census Bureau estimates on the total size of the U.S. population, which in turn affects the number of the labor force and employment. That population adjustment was responsible for all the increase in civilian employment and the labor force in January. Without that quirk, labor would have reported a 272,000 drop in civilian employment and a 137,000 decline in the labor force. So yeah, the numbers look good, but maybe they're not as good as they look. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the program and the product. You guys have to make the call, 800-306-1990, 800-306-1990. Nikki's standing by to take your call. One of the things I love chatting about all the time, and we do a lot of consulting on this. Well, I talk about it. Other people get to do the work. Todd Halterman is with us talking about the idea of how to help people get out of debt and maybe have a safe, secure, reliable retirement. Good morning, Mr. Halterman. How are you, buddy?
Good morning, Ron Siegel. How you been?
I'm doing great. So you're still helping people get out of you're on the financial world and talking about liabilities. What's that all about?
Well, what I've noticed over 25 years, remember I left being a firefighter to be in the financial business, that many of my colleagues focus tremendously on building wealth by saving, investing, and talking about tax deferred accounts. I take it from a different approach. And when I ask somebody how confident they are about their retirement and the aspects for retirement, they say, oh, somewhat confident. I said, if you had a retirement with no debt, how confident would you be that you could retire at the time that you wanted to? Then I'd be really confident. And a lot of my colleagues don't get paid to focus on debt. So you'll see them not focus on getting out of debt. But there's a lot of people around the country that are following certain people like Dave Ramsey's programs and the Financial Peace University. But the problem is most of those programs tell people how to do it. And it takes an average of 21 to 23 years for people to actually get out of debt in America today. And in my opinion, it's too painful and too long.
Yeah, 21 years to do that. That's a long time. And, I've followed that system, or I shouldn't say I followed. I've studied that system. And it might be great in certain parts of rural America. I had a conversation yesterday with somebody, and they were talking about they had a friend that had paid like $400,000 for their house, and it was like a 7,000-foot house. Well, 7,000 square foot house in Southern California, you're looking at $1 million plus. And then Mr. Ramsey says, okay, you can't do anything but a 15-year mortgage. That's tough to pay for to afford a 15-year mortgage. Are you talking about that same kind of thing, Todd, going to 15-year mortgages?
No, really what happens is there's a couple different ways that people structure their bill pay. And traditionally, Americans will pay the bills the way they best see possible. They'll put a couple $100 a month extra on a car payment. They'll put $50 to $100 more on a credit card, maybe a few $100s a month more on a mortgage. And they try to pay those down. Ron, that's the slow drip. That's the slow way to get home. But I tell you, the second way to prepare bill pay is to actually ask a scientist of mathematics, an actuary, how they would pay bills with their cash flow. So in our world, we help people without paying any more money than they pay right now get out of debt in 9 years or less.
9 years or less? That's a big drop from the 21 to 23 you said under some other people's programs.
Well, the key component is if you're an American that's looking to try to get out of debt and you're assertively placing extra payments into credit cards, automobiles, and of course mortgages or student loans, I applaud you. But there's another way to coordinate using your cash flow, and our team simply uses an actuarial team to help show our clients and the people we're helping how they can do it differently, but not spending any more money than they're spending right now, Ron. We try not to make it totally painful, but we can redirect how people are collecting their dollars and where they're placing them. And we guarantee, literally, if they qualify, they guarantee to be out of debt in 9.3 years or less.
So here's the big question, though, that I always would throw at somebody that makes that guarantee is, I'm assuming that part of the issue is going to be that we have to get people to follow through.
Well, execution is one piece, but when you see the system and the way that the actuaries help collect it, they really help people become their own bank and create their own bank to be self-sufficient and debt-free in 9 years or less. And then when things are paid off, they'll actually have a bucket that can provide some tax-free income to them in retirement to supplement. So there are a couple of different ways to approach the game. We just believe that if we can get it done in 9 years or less, somebody is more likely to be successful than 21 years. And frankly, if we ask people not to spend any more in their monthly budget than they spend right now, our incidence of success goes way up.
So my question would be, I'm a big proponent on Ron Siegel Radio that you have good debt and you have bad debt.
Yes,
And
sir.
I'm not talking bad debt from the sense of the business that doesn't collect it, but good debt being, if I've got a mortgage right now, and I know that there are some listeners and some of our private clients that have mortgages between 2% up to maybe 3.5%. Do I really want to pay that off early?
Well, there's a thing in the banking world called arbitrage. And Ron, that is an automatic profit. So if we can teach Americans how to redirect their cash flow without spending any more than they spend right now and create an arbitrage moment, that's an automatic profit, it would be foolish to pay off that mortgage too early. But the reality is we try to get people retired at 55 to 60 so they can live a long go-go retirement. And the best way to do that is to help them redirect funds and build a bank account to even have their mortgage and their student loans retired when they stop working.
That'd be exciting. I think a lot of people, I've shared many, many times, Todd, that from a mathematics standpoint, I can prove beyond a shadow of a doubt that having a mortgage is good and putting that money somewhere else is better than paying off your mortgage. But I don't stand a chance when it comes to somebody's emotions.
No.
Right? They have an emotional desire to be debt free, and I think that's what you're talking about.
It really is, but it's the freedom of doing that. But here's reality, Ron. The average American home has averaged about 4% per year in growth in values. Now, recently it's been a lot more than that, but the average has been about 4%. If your interest rates are lower than the growth rate of your home, then that means your home value is outpacing the interest that you're paying along the way. Now, I'm going to pretend that nobody gets to write their interest off, okay? And the reality is, if you can make 5 to 6% with your money, and believe me, there are fixed certificates out there paying 5 and 6%, and you're only paying 3%, that means that you're the bank. Instead of the bank taking your money and giving you 1%, you're making 6% and paying the bank 3%, therefore keeping the 3% difference. So yes, a strong mortgage, underwritten properly, funded correctly, is good debt.
That's great information. We're going to continue our conversation with Todd Halterman. If you've got questions, go ahead and put them in the comments. We'll see if we can get to any of those as well if you're listening to us while we're recording live. And we haven't put this up on the screen yet, Josh, so we better get on there as well. Don't forget about our big game contest. Text big game to 844-970-1990, 844-970-1990. Fill out the short form. We want to know who's going to win the big game and what the final score is. And we've got a $50 gift card for the first person that gets the right score or is closest at the end of the game. Pick the right team, Rams, and pick this winning score, and we'll have that for you. You can reach us anytime. Our off-air number is 800-306-1990, 800-306-1990. Don't let student loans delay your home ownership. How to talk to your partner about money and credit, and continuing our conversation with Todd Halterman. You can reach me anytime. Again, 800-306-1990. We will be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
We're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomedigest.com, rsrhomedigest.com. Find out exactly what the county recorder knows about your property, what the market believes about your property, rsrhomedigest.com. Don't let student loans delay your home ownership dream. If you're looking to buy a home, you may be wondering how your student loan debt could impact those loans. Do you have to wait until you've paid off your student loans before you can buy your first home? Or could you qualify for a home loan with that debt? To give you answers you're searching for, let's take a look at what recent data shows. That way, you know what to expect and what to do next to achieve your dream of becoming a homeowner. While everyone's situation is unique, your goal may be more within your reach than you realize. Do you have to delay your plans because of student loans? If you're worried about your student loans, it means you have to put your homeownership goals on hold. Well, you're not alone. In fact, many first-time buyers believe they have to delay their plans. According to data from the National Association of Realtors, NAR, quote, when asked specifically about purchasing a home, half of non-homeowners say student loan debt is delaying them from purchasing a home. 51% of the people. When asked why their student loans are putting their plans on the back burner, 3 key themes emerged. 47% say their student loans make it harder to save for a down payment. 45% say they think they can't qualify for a home loan because of existing debt. 43% say they believe the delay is necessary even though they've never applied for a mortgage. Shame on you. No matter which reason resonates most with you, you should know a delay may not be necessary. Here's why. Can you qualify for a home loan if you have student loans? In the same NAR report, data shows many current homeowners have student loan debt themselves. Nearly 1/4 of all home buyers and 37% of first-time buyers had student debt with a typical amount of $30,000.
Ow!
That means other people in a similar situation were able to qualify for and buy a home even though they also had student loan debt. You may be able to do the same, especially if you have a steady source of income. Apartment therapy drives this point home. Quote, buying a home with student loans is possible, experts say. The proof is in the numbers, too. Some 40% of first-time home buyers have student loan debt, according to the National Association of Realtors study, unquote. The key takeaway is, for many people, home ownership is achievable even with student loans. The best way to make a decision about your goals and next steps is to talk to professionals. A real estate advisor can walk you through your specific situation, your options, and what has worked for other buyers like you. They can also connect you with other professionals in the industry who can help. You don't have to figure this out on your own. Lean on the experts so you have the information you need to make an informed, confident decision. Bottom line, many other buyers with student loan debt are already achieving their homeownership dreams. Maybe it's time for you to connect with a professional. Give us a call, 800-306-1990, 800-306-1990. Our team is standing by to help you get into that first home, or at least get that game plan going for it. Continue our conversation this morning. Todd Halterman, we're ironic enough that we had that story, Todd, comes out just this morning about student loan debt, and we are chatting with the master of no debt. We haven't even put that one on the screen yet, Josh. We have our no debt opportunity, rsrnodebt.com, rsrnodebt.com. You've been listening to Todd Halterman discussing this concept of being debt-free, and you want to be there in 9 years, 10 years? What if it's even 12 years, right? Fill out the form, rsrnodebt.com. Get a consultation with Todd and his team. What's the cost for a consultation, Todd?
It's gratis, man. We want to make sure people get the information they need.
Yeah, that's the whole idea. We give away so much stuff right here on Ron Siegel Radio. We want to make sure, exactly as Todd said, it's about giving. It's about the life you desire, right? The life you deserve. And
people can spend more time learning and getting that knowledge, then they'll understand the power.
Yeah, that's a key thing. And Todd, go back in the last segment, you mentioned something quickly, and I'd like you to dig into the concept of arbitrage a little more.
You bet. Well, a traditional banker allows people to deposit money into their institution in exchange for promising to give it back to them as soon as they ask for it. And the government requires banks and financial institutions to keep a reserve on hand so when you do ask for your money, they can give it back. Today, banks are not required to keep any reserve. That was lowered during the COVID Secure Act. And today, when you deposit money into a bank, they use your money to build buildings, invest in different instruments of finance to make their bank 5 to 7% in overall net interest. They pay CD holders 1% if you're lucky, maybe a little higher if you have large deposits. And the bank's keeping 4 to 5% of the spread in interest. Now, the bank calls that 4 to 5% arbitrage because they have a liability to pay 1% to the deposit holders, and the rest of the income comes in and the bank retains that for their executive compensation, to build more branches, to hire employees, and of course, to line the stockholders' pockets.
Line the stockholders' pockets. So if I understand this correctly, if I can flip that around where, okay, so maybe I can talk to somebody and get 5, 6, 7, 8%, no guarantees, right? We don't care. Well, Todd did say there's some guarantees in there that I don't even know about, but I generally don't like to talk about any guarantees here. But unless you're buying treasuries, and I think I said that was at 1.9% or something this morning. But the bottom line is there's other opportunities, right? But if you can sell your money for 5 to 8%, and you're paying for that 3%, which is your mortgage, or 3.5%, whatever you qualify for, even 4%, that spread you get to keep.
Yes.
Now, what do I do with that spread, Todd?
Well, some of the strongest people that we work with understand compounding growth and compounding interest. That works for the banks as well. You know, the more interest you pay, it compounds for the bank. So we tend to teach people how to use good debt, that's mortgage debt, to be able to collect their eggs. And then we create a bank account for the person that has that mortgage. And we really help them create arbitrage with their own money. And the goal is to have them not spend any more money than they spend right now every month. But we help them understand how to redirect some of that cash to build their bank, to have arbitrage. Instead of their bank having arbitrage on them, we allow them to build arbitrage. Therefore, within 9 years or less, if they qualify, we guarantee we'll get them out of debt.
Now, here's the idea there that I look at with that, Todd, and tell me if I'm on the right track or wrong track. When you're building up that account with the arbitrage, with that spread, at the end of 9 years or 10 years, can I say, Todd, I like what's going on here. I want to continue, and I don't want to write a check to pay off my mortgage. I want to just keep making my regular mortgage payment and let that account continue to grow for my legacy. Could I do that?
You bet. And what's interesting about that comment, Ron, is that with interest rates being as low as they are today, if we fast forward 9-10 years from now, predictably interest rates will be higher. Now, if that's the case, then the overall growth of their bank will be higher as well. So that means that they may be making 8% on their money. And guess what? They'll go ahead and pay that 3% mortgage and use that cash to have tax-free income during retirement instead of getting rid of the debt. So that opportunity does exist and it does happen. But we try to focus on how much better retirement would be if you didn't have any debt, or the debt you did have was lower than any rent you could pay anywhere.
So the concept here then becomes, I understand that I could be debt-free in 9 years, but am I going to talk to you, Todd, in the next 9 years, or do I set up the program today and then we chat 9 years from now when the program's all finished?
No, what happens is our team, our back office team here, they're the concierge. So once we set a program up, they'll get regular notices from our office and reminders of things that they're doing and their success, the video blogs, educational materials. And then once a year, we do what we call a top-down review. The top-down review just asks what financially has changed in your life. Have you gotten married, divorced? Have any of your children had large capital needs? Have you had to take on any additional debt this year? Because life changes, Ron. It's never in a static straight line. So we understand that. So a regular review annually is important because it helps us keep a pulse on what their true needs are and where their life has moved to.
And that's a key thing. And one of the things that just drives me crazy, well, many things drive me crazy, and some people say I start out that way, is one of the things most people will omit, they don't even think about when they're doing these top-down reviews, is the largest asset that somebody has, right? So I hear every financial planner that I talk to says, well, we do a review or we send out quarterly statements or monthly statements. And those statements almost never have the biggest asset that most people have.
No.
Right? They don't talk about what changed in the value of the mortgage. What changes have there been in the value of the real estate holdings? And I'm going to submit, and I know Todd's one of my dearest friends, there's a whole lot of financial people, financial planners in the financial community. Now, Todd's not one of them. He works to help and educate people, but there's a lot of people in the financial community that say, well, we don't deal with the mortgage. We don't deal with the real estate because the fact of the matter is they don't make money on it, right? They're dealing with stocks, bonds, mutual funds, annuities, insurance products. because that's where the firms that they're with make money. When you're talking to someone like Todd, who's dealing with your overall holistic deal, your whole overall holistic approach, right? You're looking, how do we get at it? I mean, when was the last time you talked to a financial advisor that said, let's see if we can get you out of debt in 9 years? Right? That's not part of the conversation. That's how much more can we get in what in the industry is called assets under management. That's the focus. Well, when you talk to someone like Todd, you got a whole different approach. So I'm going to highly recommend, see if there's a better way. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, more with Todd Halterman. We've got some more giveaways to give you as well. Don't forget the big game. We got to get that on there as well. Text big game to, I can't remember the number, but Josh will have it for me. 844-970-1990, 844-970-1990. Tell us who's going to win the big game, Rams, and what the score is going to be. First one to get the right score or closest to the right score is going to win a $50 gift card. So get in there. No purchase necessary. It's not like you have to buy something or do something. Reach me anytime off air, number 800-306-1990, 800-306-1990. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at RonIsMyLender.com. That's RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and you will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It's wrong. What are you doing about it? Credit Sanitizer, they've got the solutions. How to talk to your partner about money and credit is our subject today. Money, credit, and debt can all be touchy subjects. Yet having honest conversations about your finances is essential when it comes to romantic relationships. Hey, nothing says romance more than, hey, honey, I'm in debt. I don't know about that. According to a 2021 survey, 18% of divorced couples regret not talking about finances more frequently. Well, I guess maybe that is a big problem, being that we've got a 70% first-time divorce rate here in Orange County, California. Meanwhile, couples that had more open financial conversations tended to be happier. If you're not already in the habit of talking with your partner about money and credit, knowing where to start can be difficult. Unfortunately, there is no one-size-fits-all approach to these important conversations, but you can consider the following 3 ideas and see if they seem like a good fit for your relationship. Idea number 1, plan a financial date night. That sounds romantic. Idea number 2, talk about the future and the past. Number 3, share responsibility for the monthly financial to-do list. Bottom line, talking about money and credit can be intimidating at first, yet many couples find that financial transparency and openness strengthens their relationship. Working with a partner toward mutual goals can be powerful. It's also important to note that you don't have to try and navigate this process alone. A financial therapist can help you and your partner if you don't feel equipped to start or continue the money conversation on your own. That is the Your Credit Matters segment brought to you by creditsanitizer.com. You have a credit report. It's wrong. They all are. What are you doing about it? Continue our conversation. Todd Halterman is with us this morning, and we are chatting just about that. Now, we didn't get into the romance side of this and taking this out on a date or anything along those lines. That might be. I'm not sure. I can't say a whole lot about success and failure in relationships. I think the term is 35 years into a life sentence, or just about 35 years into a life sentence. And, we've had the ups, we've had the downs, we've had all of that. You just have to get back to back and work, right? And when you're talking about money, it's no different, right? Get back to back, work together, cover each other. And, it's part of the relationship. If you think it's going to be all just a golden ticket, well, you're living in Newport Beach. I'm sorry. No. I shouldn't say that. But it just doesn't work that way. Todd Halterman, let's chat some more about making money. So, so far, when you think about it, I don't know what the numbers are, Todd. You may know this better than me, but I know in Orange County, California, we've got a median home price of $950,000. Let's just say somebody's got, $300,000 in equity. So they owe $600,000 on that property.
Right.
And then you've got maybe $50,000 in auto debt and $50,000 in student loan debt, and $30,000 in credit card debt. So that's about $700,000. Let's call it $750,000 by the time we add everything together in debt. Now, if we could put together a way of just reallocating our money to get rid of that, maybe you have an idea here.
Yeah.
What somebody would earn on their 401k? What is if I just said, Todd, on what is a safe projection for me to earn on my 401k?
Well, instead of me quoting a number that I believe, I'll tell you what Vanguard puts out. Vanguard put out a white paper this year, and the study basically said if people expect to average more than 6.5% to 8.5% over the next 10 years, they're misguided. So basically, you can take 20% risk with your money to average 6.5% in the equity markets over the next 10 years based on current economic policies, economic trends, and of course, the volatility in the stock market that we have today. So the problem is, Ron, the average American household only saves 3% of their income on a monthly basis. 34% of their budget pays interest. 34%, Ron. And the lifestyle they live, that's out vacationing, having some dinners out, those date nights, that's 23% of the lifestyle. So the remainderment of that, 40% or so is honestly taking care of taxes. So the average American household saving 3%, they're paying 34% of their cash flow out in interest, that's debt. Our approach at helping people redirect cash flow is they're saving about an average of 15%. Their interest expense went down to 22%. And their lifestyle is at 33% instead of 23%, and taxes go down considerably, obviously the remainderment. So basically, We cut the cost of taxes almost in half. We quadruple the savings amount. We lower the interest by 30%, and their lifestyle increases by 50%. That's what we're trying to do to improve people's lives.
That's just amazing, because it sounds to me like, for the most part, the plan is, let's take the money away from the government and cut our debt and increase our lifestyle. If I cut down what we've been talking about for the last hour,
right?
That's about the bottom line.
And what we're trying to do, Ron, especially you're a huge advocate for people in doing finance correctly. Reduce the volume of interest that they're paying, to lenders. We want them to get out of debt in 9 years or less. We want to improve their cash flow. We want to decrease taxes. And if you need to save for college for kids, we want that as well. But we really want you to retire with tax favored income. So what we're trying to do is show Americans how to play the game of life, and without spending any more money than they spend right now, come up with a game plan that allows them to improve their life, reduce their taxes, improve their growth rates, and retire earlier.
Seems almost too good to be true, Todd.
It's not, Ron. Right now, the environment that the government's created the last 10 years with quantitative easing, artificial interest rate reductions, keeping rates low to help the markets expand, has caused all kinds of opportunities in the marketplace for people who want to get out of debt to be able to do it in a huge way today, because the money's cheap. Banks are cheap right now. And we can take advantage of where the banks and interest rates are at right now, because you hold the power to help people do that. Then we create our own arbitrage with our own bank. Arbitrage is automatic profit, where we're going to pay the bank 3%. You're going to make 6 to 8%, and not in the stock market, by the way. We don't redirect people's money to the stock market. We redirect it to their own bank account, where they hold the bank and they are the banker. And, they're still going to make that 5 to 6%. But guess what? It's tax-free income related.
Wow. So that's where you're cutting down on that 40% tax. Well, and you're in Washington. I don't know all the tax rules there. In California, they like to tax everything we possibly do. So it's, cutting taxes back that as much as possible is a fondness. And then think about this concept, though, because right now, if you look at that schedule that I gave you, that I shared a little bit ago, you have a $600,000 mortgage, say 3 to 4% you're paying for that. Automobiles, you're probably paying 4 to 5%. Student loans is 7 to 8%. Credit cards, 15 to 20%. I mean, think about getting all those things paid off, and then just redirecting that same money. That's going to move the process along pretty quick, isn't it, Todd?
Yeah, we notice people spend an average of a couple $1,000s a month keeping up with lenders and institutional interest rates. So imagine being able to put $1,000 to $2,000 a month back into your budget to compound your saving for retirement, or to compound the way you live your life. But the big component isn't just how much are you redirecting, it's how much do you pay in taxes, how are you living your life, and we're making sure that you're in control of your money instead of your money being in control of you.
Now, do you find when you're helping people along these lines and with this process, once you help them get out of debt, I've found in many, many times throughout my tenure in doing lending for the last 20 plus years, right, that people are creatures of habits. You help them get out of debt, and 2 years later you call them and they're back in debt again.
Well, that goes along with our coaching and counseling and our teaching and education. It's why we try to stay in contact with the people we're helping advocate for. It's easy once you pay off a debt to take that money and go do something else with it. And all of a sudden, I want to buy that motorhome. Well, I have $600 a month extra now. I can pay for that motorhome now. And some people do backslide and they create an additional debt for themselves. Sometimes it's unavoidable, but other times we're trying to get ahead of it by staying in contact and talking about those decisions, to talk about the impact, not the fun, but the impact. So it really is an ongoing saga, and some people subscribe to it. Some people fall back to the same old habits. The situation is the boss.
If you want to get a little bit of an idea of what Todd's talking about, we did put together a demonstration. Nothing is exact. These aren't your numbers. We're not giving you any kind of financial advice or lending advice, but Go to rsrrapidpayoff.com, rsrrapidpayoff.com, and just take a look at an example. Now, this is a real life example. It's from a family that did come to us last year, and we put this up there just to show them. We took their name off, obviously, but take a look at rsrrapidpayoff.com and take a look at what Todd's talking about. If it fits you, give us a call at 800-306-1990. Happy to put you in touch with Todd Halterman and his team. You can go right to that rsrnodebt.com form, fill that out. It gives them a little bit of background information. And let's see if we can help you be debt-free. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. As always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.